High Yield Real Estate Investing Podcast. Let's go over the features of my free property analyzer spreadsheet. If you've already downloaded my spreadsheet, then awesome. If not, go to my website, highyieldre.com/download, enter your email, and you'll be able to download the spreadsheet. The file's in Excel, but should easily convert to numbers or Google Sheets, whichever one you prefer. I made this analyzer a number of years back when I wanted to sift through real estate listings quickly and see if any were worth taking a closer look at. In about 30 seconds or less of data entry, I had all the basic numbers I wanted to see. Also, some listings wouldn't always list the asking price or the NOI of the property or the cap rate. So luckily, if you have at least two of those numbers, this spreadsheet will fill in the blanks for you. So let's get to it. First of all, only input cells with a border here. So all of these with a border are the only ones you can change. Everything else is locked, so you can't accidentally change the formulas around. If you do want to change the spreadsheet around to your liking, feel free. The password to unlock the cells is cash flow, one word. Rows and columns are limited here, so you can't get lost in row 65,000 of the spreadsheet if you press a wrong key. So we got five categories or five areas here that the spreadsheet looks at. You got your pro forma numbers, which you get off the listing, profits, your income, expenses, and some financing items right here. So let's get started. Asking price should be the most obvious one. You put that in here. Since this is mostly a multifamily worksheet, you can do single family with it too. It's just fine. Put the number of units here, but it doesn't really matter. It just calculates some per unit numbers in some of the other columns. Cap rate, if you know it, you can put it in here. And you see as I hover my mouse, there's these little notes here that tell you how to use it and what all of these cells mean. So anything with a red tick mark in the top right of the cell, just hover your mouse and it'll show you or give you an explanation of what's going on here. So cap rate, if you don't know it, that's fine. Leave it blank. It just calculates some other things for you in some of these other cells. Your down payment goes right here. If you're doing a typical investor loan, you only need at least 25% down. That number is calculated for you right here. So you can go ahead and as a start, just input the number you see in that cell in the down payment column, and that'll give you 25% down. Coming down here, profits. So this will show you your monthly cash flow. This is obviously negative right now because this price is way too high. Your cash on cash return, rent to value, total return, and your total ROI. If you don't understand what these numbers are, go listen to our episode on the simple math of real estate, and we'll go over all of those for you. So let's input 300,000 the asking price, and everything turns a little bit better down here. So you see the monthly cash flow, cash on cash, all these numbers went up to be very positive. Income. So the only thing in here you can input is gross yearly revenue. So take all of the rents you can possibly collect for the year and put that value here. In our example right here in this fourplex, each unit rents for $750 a month. So 750 times 4 times 12 months gets us 36,000. So we see a yearly gross of 36,000. It's just repeated this number here. Your monthly gross is 3,000 per unit gross, 750, like I just said, and your monthly net after expenses here. Gross rent multiplier is right here if you want it, and there's a little explanation there if you don't know what that means. Property expenses expressed as a percentage. So if you're doing multifamily like a 4-unit or above, you can just start out at 50% if you don't know what your expenses are. 50% is a good estimate. If you do know what your expenses are, just change this percentage number until this number right here matches your dollar amount for expenses. So we have our yearly revenue minus our expenses gives us our NOI right here. And then our cap rate is calculated right here. So this is the actual cap rate that you're getting. In your NOI from the known cap. So that's this number right here. So if I change this to be a 6, then our NOI from our known cap we put in here is going to match the NOI the spreadsheet calculated from our expenses and our income. Financing is the last one, so we're financing 175,000 of that. Amortization period is 30 if you're doing residential loans. Just leave it at 30. That's probably what you're getting if you're doing commercial stuff and you're going with a small bank loan or a regional bank or something that they're only giving you 20 or 25 for the amortization period. Put that in here. Interest rate you're getting goes right here. At the time of this publication, things are looking really well for interest rates. So if you're doing a investor fourplex loan, you can probably get around 4%, maybe even a little less. So just input that here. The spreadsheet will calculate your principal and interest payments each month. You see that here, and then the yearly. And then if you're doing commercial, we have the DSCR. Again, if you don't know what this is, go listen to our episode on the simple math of real estate. If you're doing residential loans, don't even worry about that. 4 units or less, just leave this alone. If you're doing commercial and you know what the bank is going to want for a DSCR, then you can put that here. There's some other calculations down here below, which are going to be really useful if you're buying a property with a high cap rate. So let's say instead of 300,000, our fourplex was 500,000. And all of a sudden, well, let's not make it that high, but let's make it here. And our cap rate's 4.5. So 25% down isn't going to make the bank happy because our DSCR is only 1.14. And we said we needed a minimum of 1.25. So what down payment do I need to satisfy our minimum DSCR? Well, the spreadsheet will tell you. Down at min DSCR right here. So 148,646. So if I come up here and let's just put 149,000 in the down payment column, then I now have my minimum DSCR I need to satisfy the bank loan. And that's it. This is really simple. Once you just pull up your listing and put a few numbers right here, usually the financing stuff, you just set it and forget it. But as you go through listings, you can see what kind of return you get. So here we're seeing monthly cash flow, cash on cash, rent to value, and all that stuff right over here. So you can go through listings really quickly and figure out if you want to look at something in a little more detail, or if you want to move on and look at something else. So that's my spreadsheet. Enjoy. Any questions? My contact info is down here. We'll see you later.